you have an election to make at retirement, and you have three choices. Are you going to leave your spouse 50% of your annuity? In so doing, you will take a 10% reduction while you're living. The cost will be 10%. Or you leave them 25% at a 5% cost, or leave them nothing. You have to choose one of these three options for your FERS retirement system. You will elect the 10%, the 5%, or the no reduction in your pension for the rest of your life in exchange for a benefit when you die for your spouse. What do we call that, class? You die, somebody else gets a benefit. That's life insurance. You did it, that's right. So you now have your biggest life insurance decision you've ever made still in front of you. That was not what you thought coming in today, was it? We're talking 10% of your annuity the rest of your days. So let's walk through an example of retiring. You have a $22,000 annuity. 10% of that is $2,200 a year, right? That means you're drawing $20,000 a year. If you pass away, your spouse gets $11,000, which is 50% of the larger $22,000 number. Okay? There it is. There's your cost of insurance and the benefit that they get. Now, let's just assume by accident both of you live 25 years from that date. With COLAs being built into your pensions, now your gross pension would have been $36,000, but 10% of that is $3,600 a year, leaving you with $32,000 in annuity. If you die, your spouse gets $18,000, and so you have paid $72,000 over that 25-year period. Just in case you would have died, your spouse would have picked up a monthly check. Your spouse dies after 25 years. What happens to the $72,000? It's gone. It's a sunk cost. Okay, it is out of there. You do get the step up from your $32,000 pension to your $36,000 pension. You get to pick that back up, but no more, nothing else with that $72,000 or that cost built in. So that's a consideration. Now, you've got two things going on. You've got a unique situation that most people don't have, in that you have this large pension check on your head, on your life, and it probably, for most people in the room, it probably does need to be insured, either via survivor benefit or life insurance or outside assets. There probably needs to be some insurance, because your big check is probably, on average, we see hundreds of these cases every year. I bet your pension check will represent about half of the retirement income in the household when you retire. And for half of that to vanish would be pretty significant loss for your spouse.